Imagine walking into a marketplace thousands of years ago. You have a sack of wheat, but you need milk. The problem? The milk seller doesn't want wheat. He wants a new pair of shoes. What do? This was the reality before money existed. People had to trade goods directly, and if no one wanted what they had, they were stuck. Today we swipe cards, transfer money online, and even buy things with cryptocurrency. But how did we go from bartering to Bitcoin? The answer lies in the history of money, how it was created, who controls it, and most importantly, how understanding money can help you build financial freedom. Stick around because this is information that can change the way you think about wealth forever. Back in ancient times, there was no common medium of exchange. People traded goods directly. The problem was double coincidence of wants. Both parties needed to want what the other had. Example, if you had rice and needed a goat, but the goat seller didn't want rice, you'd have to find someone who had a goat and wanted rice. This made trading inefficient, slow, and frustrating. Interesting fact, some civilizations tried to assign value to common goods, like shells, cattle, and even salt. That's where the word salary comes from, because Roman soldiers were paid in salt. Around 600 BC, the first metal coins were introduced in Lydia, modern-day Turkey. Coins had intrinsic value because they were made of precious metals like gold and silver. This made trade easier. People could exchange money instead of goods. Did you know? The Chinese were the first to introduce paper money around 700 AD. Unlike metal coins, paper currency was easier to carry and store. By the 1600s, banks started issuing banknotes backed by gold reserves. People trusted that their paper money could be exchanged for gold, leading to the first modern currencies. Banks became the middlemen of money. Instead of people storing gold at home, banks kept it safe. But banks didn't just store money. They started loaning it out for profit. This was the beginning of credit systems, where people could borrow money and pay it back with interest. The richer you were, the easier it was to get credit, and this principle still applies today. Today, cash is disappearing. We now use credit and debit cards, online banking, and mobile payments. Cryptocurrencies like Bitcoin and Ethereum governments are even working on central bank digital currencies, CBDCs, which could replace cash altogether. The question is, who controls money now? Is it banks, governments, or decentralized crypto networks? Money has come a long way, from bartering to digital transactions. But the one thing that hasn't changed is who controls it. Banks and governments decide the rules, but with new technologies like cryptocurrency, that power is shifting. So here's the big question. Do you think cash will disappear completely in the next 20 years? Or will people always want physical money? Drop your thoughts in the comments below. Would you rather carry cash or go fully digital? Comment below.